We just got some news, some very interesting news coming from some of the strategists that are following the market have been following the market for quite some time now, and they're telling us if you are somebody willing to invest your money now or buy the dip in the stocks right now, because this is the worst start of the year for the markets in decades. Well, the good news is you might be in for 22% upside in average just in the next 12 months. This is something we need to look into, folks, because we all need to be in that place where we position ourselves to be financially free. If you want to continue to work, that's on you, but you're not at least trading your time for money, because you will actually free that time up to do something else, whether it's something that will bring you additional sort of income or something that will just give you, the ability to do something else to enjoy life. All right. Now, a way of doing that is to get on opportunities such as the one we're currently in the midst of. I know it might sound a little bit crazy and strange, because in the midst of the red, in the midst of everything being negative, people will tend to hold on to their cash. People will tend to hold on and be into defense mode. But now is really the time to be aggressive, but in a smart way. And the smart way to do that, we've been talking about this in the channel for a long time now, is to dollar cost average. And when stocks, especially in this time of the year, and this specific year, are down based on fears of recession and inflation and everything, you want to make sure you position yourself now. And this is exactly what this strategist is telling us. Those who buy stocks the day the S&P 500 enters a bear market have made an average of 22.7% in 12 months. What does a bear market territory mean for the S&P 500? It means for the beginning of the year, it means the S&P 500 is down 20% minimum from recent highest. And the recent highest is around 4,800, which we reached by the end of 2021. And so far, year to date, since January started, the S&P 500 is down 22%. The Nasdaq, it's even worse, because the Nasdaq, it's down 32%. Now, what this tells me is we are in a bear market territory by looking at the definition from a technical standpoint. So this strategy is telling us those who buy stocks the day the S&P 500 enters a bear market have made an average of 22.7% in the next 12 months. So in a year from now, if you buy now, you will make at least 23% on your money. If you only invest into an index fund tracking the S&P 500, something like a VOO, all right? Now, if you look at some of the stocks that have good earnings projection as of now, I bet you can double these 22%. And for some, you can even triple it, depending on how, the outlook look for those companies, all right? But the thing is, what is causing, or what has caused the stock market or the S&P 500 to be down in this bear market territory is inflation. But inflation will not last forever. Inflation is going to finally transition on the way down. Why? Because if you look at the data now, Bank of America is telling us that people are transitioning from buying wants to needs because prices are getting higher. Another data we have is people are shifting from buying goods and are now buying things that will get them to have more experiences like travel. We also have data telling us that Americans are now than ever gloomy and doomy about the state of their finances, just because everything is so much more expensive than it was a year ago. So all of this tells me that we are at that point, we are nearing that point where it will make sense for inflation to go down, because people will be tired of paying the price of paying high prices, paying the price of inflation, and maybe they're gonna force us as consumers to a little bit shift our consumption habits and finally trend inflation down. And as we trend inflation down, the stock market is going to gradually start to recover, especially if the economy remains stronger. Continue to remain strong as we see now. And by strong, I mean balance sheet of companies is still very good. Like companies have a lot of money, so that even if we get into a recession, I don't think it's going to be something like we saw back in 2008, where people were being fired left and right, just because companies are more prepared right now. So as the market recovers, as the S&P 500 goes back and recover all the losses, history tells us that the next bull market will start from there. And this is when all of the trades, all of the investments that you're making, all of the companies that you're buying now will definitely reward you in a big time once we get to those levels. And that is how you build wealth. Now, depending on your capital, you might get to a certain point a little bit faster than others, but it doesn't change the fact that we're in for definitely something very, very, very interesting there. So if you want to know exactly how to position yourself as of now, please check out in the description below some of the services I'm offering in terms of getting you to start in the stock market as an investor. We'll definitely carve out a strategy just for you. Or if you just want to make a swing trade, maybe, get to know exactly which some of the stocks you may be getting in now and sell maybe in the next 2 months, the next 3 months, or your portfolio is not, as efficient as you think, and then we can definitely look at that and see how we can make some tweaks, depending on what your needs are as an investor, as a person, and given your financial situation. So look into those, folks. Look into those and let me know how things go. But I'm definitely taking advantage of these times, because these are the times not to be panicked, even if everything looks like there's not going to be tomorrow, if you see what I mean.